Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. This is just my opinions. See more below. So, yeah, let's get into last week's and everything. If you actually look at it, the market was up 600 points after a sort of a beatdown. And if you look at it, the CNN, the Fear and Greed Index, there's extreme fear still, so that will continue the bounce. Generally, if there's extreme greed, that means a sell-off's coming. And once it gets sort of the fear or neutral, probably go back down. We'll see what happens. I said the S&P will go up to 6,500 or 7,000 if there's another run. And it'll happen this year. I think after this year, we're going to begin that bear market that's going to last 15 to 20 years. You can already see the coming out of the market, the sellers. But let's go on the economic data for Friday. I was there. Look at that, 3% inflation right there with the core PCE. Personal income spending went up 9%. You have to remember that's January. Now with all the layoffs and everything, I would expect that. But look at personal spending. That's down 2%, and I think that's going to continue to go down as more and more people, private and public now, are getting laid off. A recession's coming, and it's going to be really ugly. As you know, and then look at the Chicago PMI. That's in contraction still. It just keeps getting in contraction, and there's no good policies in sight coming to increase it. So. You look at that coming up, you look at it, there's construction spending, S&P, global, ISM. So look at that, that's what we have coming up. Some of the things I wanted to get into right here. And rising costs take their toll on less affluent Americans' travels plan. So anyway, what this was, so you can see international remains strong, but the US vacations, they are now scrimping. And that means that the stores, the shops, and the other thing is now with the talk of Canada, Canadians are no longer. That's about 100 million in less for tourism. So this will lead to more. So we're seeing a lot of problems. Rising costs takes toll. So you can tell the economy's weakening. Uh, let's keep going. Now, this is another one. Consumers slashed their spending by most since February of 2021, even as incomes rose. So, this is really a bad thing. You know, the 70% of the US economy is consumption. You have to remember that. 70%. It's probably more, but you can see consumers are really cutting back. And not only that, with the Doge cuts, now the other spending is going to go down. So, and with all these bubbles, all these credit bubbles that have been around since the last 4 years, credit cards, auto loans, housing bubble, uh, the other one, and commercial real estate, this will not continue. And speaking of the municipality, this is the DC CFO. Paints grim economic structures with over $1 billion in deficit. So this is the thing. This is one, and this will lead to bailouts. They'll bail out state and local governments. So this is not going to be a saving or restructuring. In fact, they want to take over DC, the federal government. So this is going to be uh, this type of debt is going to have to be reabsorbed into the federal government. So they're not going to let DC go broke. And all this stuff you can tell right here, the Atlanta Fed GDP seems to be very accurate. And first quarter is on track for negative GDP growth. Remember, if this is negative, next quarter is negative, we are in recession. So look at this. It's on pace to shrink by 1.5%. Now they say they want to take government spending out of it, which to me doesn't make sense because then it would be, you can see the consumer spending is down. So we're going to see, but you know how they work. They're always changing the rules. Uh, and it says, yeah, it coincide with some indicators showing a growth slowdown. I thought they said they thought second quarter would be a little bit better, but I'm just going to go look through this article. Yeah, there's the 1.5 January through March. Yeah, here it is. Consumers spent less. And now they try to blame it on the weather. They always do that. I still remember in 2013 they wanted to blame it on the weather. It shouldn't matter because if the weather's that bad, then Uber Eats and deliveries and all that should then be actually increasing because people don't want to go out. So, yeah, spending fell. And then net exports, look at this, tumbled 3.7%, and that will continue. So so exports are crumbling, meanwhile spending's crumbling. Now imports may crumble too because we just buy everything overseas, but that's still yeah, bumpy start of the stock market. I do expect a bounce, but and they must listen to this channel because well, I always said I made that call. I can't believe I had that, but the Fed was done in December. Rate cuts for now. But as I said, multiple interest rate cuts, they're going to go back to cutting. Maybe by the end of the year or middle of the year. Well, QE's coming back. It's not, and that will lead in 2026. Inflation is going to get really bad. We're going to have really bad inflation problems too. So that's how it is, and we just don't have smart people running things. They wouldn't engage in a lot of this. So anyway, that's all I have. Just if you're looking at this based on the long term. Short term, there could be a bounce in the data, but the Atlanta Fed, GDP, we're headed towards recession this year, unfortunately. And just remember, and then after that, we're going to get stagflation because the Fed's going to resume the printing of money. So hit that like button, subscribe, give me a follow on Rumble, and just remember the disclaimer, not financial advice, just my opinion. And this is why I think gold, even if this is a short-term bounce, it's not going to last long, at most a month. And then I think gold will make its, after next year, we're going to have a free for all. We're going to have, the commercial real estate, the auto loan bubble, and that will have force majeure. So I think all assets are fair game to get the knife. That's just my opinion, not financial advice. I will see you next video.